What's good, YouTube? It's your boy Zay, and welcome back to my channel, First Generation Wealth Building. This is the first video of 2023, and as you all know, I am bringing you my personal stock market levels and projections, as well as the most useful indicators that I will be using that I believe will be most helpful in 2023. So today's video should be short, quick, to the point. We're going to break down a few charts, just as far as overall levels that I'll be watching for 2023. And then I'll share with you the most useful indicators that I plan to use. Now, before we jump into it, go ahead, let's get these pleasantries out of the way. Go ahead, press that like button, as well as subscribe to the channel if you already haven't, as well as share this video with a friend, anybody out there, as we continue to grow this thing. So all of that is much appreciated. And without further ado, we're just going to jump right along. So with the very first thing we're going to break down or bust down is going to be, of course, SPX, right? Our S&P 500 chart. So let me go ahead and pull up that chart real quick, and then I'm going to go ahead and share my screen here. So let's share the screen and let's go ahead and get this pulled up here. So 2023, go ahead and move that to the side. Actually, most people are like, hey, you could just move that out the way like that. So yeah, let's just look at our levels and look at the chart. So what I'm gonna do now is I'm gonna go to a 12-month and break down how I've already started, because I'm not going to redo some of this stuff. But as you can see on my chart here, this is a fib retracement, right? So this is a fib retracement tool. And what I have done is I went from this year's low, right? So the low of 2022, which is 34.9158. And I took the fib retracement, or I took it to the high of 2021, right? Our high for 2021 was 4818.62. And what this does is it breaks down, or it shows me the fib extension levels that I should be personally paying attention to for when it comes to the SPX over 2023. And this is going to be my guiding light right here. Like, I'm just going to stick to this, no changes, you know what I'm saying? Because what changes? The price change, but levels don't. So with that being said, for the year of 2023, what this is telling me is that if we were to do a 50% retracement of the movement that we did last year, in order for us to really go bullish, right, we would need to get to 4155. So 4155 is the 50% retracement level, as well as that's the level where I personally would be looking to switch my stance to a more bullish stance. Now, early 2023, right? There's a lot of commotion that, you know, people are talking about supposed to go down when it comes to that first quarter, yada, yada, yada. At the end of the day, our next level is, or our next fib level is 3,998.5. Now, you can't really see that because I have this line in the way, but you can see 3,998.51 is our 0.618 fib extension. Now, if we get here early in 2021, I'll be looking to add some protection for myself, as well as, you know, this is an area that I believe could possibly serve as an interim high or top like that. So I'll put it this way: when we get to, you know, close to 4,000, if we get close to 4,000, I want to, you know, I'll be paying attention to see how does price react, and if that's going to form an interim top in the beginning of the year. The next level is the key level is going to be this 3775, right? We break below this 3775. To me, that's a signal that we will be headed to retest those lows at 3,500. So once we get below 3775, it's a retest of those lows. And then as you can see, the low for the year based on my fib extension will be 3,100, or yeah, basically 3,100, 31, 30, 30, right? And what I have done, as you all know, I love my percentages, is that from the yearly close, right, where the SPX closed 38.39, if we were to have an 18.5% drawdown, meaning the market drops, say, another 18.5%, then it brings me to about this 31.30 level. And just so you can see, I'll go from the close and I drag this down from a percentage. And as you can see, 18.5% leads you, will get you to this point. So if we were to have a 20% drawdown, basically we going under 3,100, right? What would a 10% drawdown look like, right? So if we have a 10% drawdown, then I know that 10% gets me to 34.55, aka a retest of those lows. And so for simplicity purposes, that's it. Like there's not much for me to really have to break down or go into when it comes to the SPX. You know, I'll throw in an extra percentage so you know what the upside looks like. So to get to that, 4,000 level, that'd be an upside of about 4%. So we get a, say 5% is what gets me to that 4,030, which is why you see I have a line here that says add puts to 3,800, because this is where I would start to scale in. And so my upside is, if we were to get a 5%, if we were to even just have a 5% year for 2023, that means the stock market would likely finish the year somewhere around 4,030. So it ain't like, if we have a crazy, upside year, even if the market says, hey, it finishes the year up 10% for the year, a 10% year is only getting you back to 4,220, right? So basically 4,200, which is, right above that 50% retracement level. So just to kind of add that insight there, so you kind of get a feel. But that is my 2023 stock market, level projections, or the levels that I'll be paying attention to, right? So when it comes to the SPX, I don't really need to bust it down or go to smaller time frames. This is a high level, basically it's a high level summary right here. So, I'm thinking the lows could come in anywhere between, 3,200 to 3,000. I'm specifically eyeing this 3,130. As far as highs of the year, I'm looking at, like I said, 4,000 to basically 4,000. And if we get a little bit higher, 4,155 is with 50% retracement. And then ultimately, if we, a retest of these lows at 3,500, very, very simple. Now, before I get into other indices, because I'm also busting down the Dow and Nasdaq for you, I want to do a quick run through of expectations for the SPX this upcoming week. So this first week of January, because I do think we could see a little bit of bullish momentum out of the gate. So I just wanted to break that down real quick. So as I said, if I am expecting that highs for the year could be somewhere around 4,000, 3,900 area. Well, if we look at SPX on a weekly, you can see how the market has been progressing since the top of November. So basically, December was a pretty bad month. So as the way the market is set up, could we open the year with a beginning of the year pop? Absolutely. I think a lot of the tax loss selling is now going to be done because 2022 is over. So this first week, we could see a first week pop, especially when you look at like how we are, you look at where we are based on this support. I 100% can see us getting a New Year's, beginning of the year pop of roughly anywhere from, say, 4% would be on the high end, right? And if we got a 4% pop, look where it takes us, right? So that first week, don't be surprised if we get like a 4% pop just off the strength that all that, tax loss selling has been done. And, you might have first, beginning of the year inflows and stuff like that. But afterwards, if we hit that high range, this could be the setup for that rest of the year, first quarter sell-off and all of that stuff. So this upcoming week, don't be surprised if we get a rally. But after is when you need to have that head on a swivel. So just a quick bust down from a weekly perspective on SPX and just, overall thoughts. So let's get into some our other indices. So let's look at the NDX. So that's going to be the Nasdaq, right? So if I go to the Nasdaq, let's go to the Nasdaq, let's put it on a 12-month. Now this one I actually am going to have to bust down a little bit more because I don't know if I haven't updated this chart. So let me remove some of this. I'm gonna remove all of that. I'm gonna remove that. That was the high for that. All right, so just so you can get a glimpse into how I bust down. So for the Nasdaq or the NDX, I'm gonna again load a high, right? And so now I want to make sure this is 100% accurate. So that low was 10,440.64. And the high was 16,513.87. All right, so that sticks. So as you can see, stick it to the fibs. This is where we at, right? So I'm gonna bust that down. That's gonna be my low for the year that I'll be looking for. If we were to go bullish, this is where I want to see the market get above. So I want to see the market close in on this 13,477 level. That's 7725. Let me make sure this is exact. 7725. And there we go, right? And then what I like to do is then I'll add in my projections, how I like to, look at projections. So this is where we close the year. If we were to go down to what I believe the yearly low could be, it just so happens that's a 19.5% drawdown, right? You can see that 19.5% drawdown. And for us, as far as retrace purposes, if we were to get to this, what is that, 11,740, basically 11,750, that'd be about a 7% retrace to the upside. And in order for us to get to the 50% retracement, we're talking about 22%, basically 23% to get to the 50%. And that would be a, new bull market, or, you'd be looking to go bullish in the Nasdaq. So, man, you got a nice range here. Again, if we look at the NDQ from a weekly perspective, what does it look like? Just a quick bust down on how we're going to begin the year. You can see how we basically been battling over this 200-day moving average right here from a weekly perspective. This is my 200-day moving average, and this is my 50. And as you can see, we're kind of just coiling. So again, first week, do we get a pop? And then we see the Nasdaq or the NDQ pop up to this 11,740, maybe even a little bit higher for rejection, for us to then start the descent down to this basically 8,788 level on the NDQ. So that's basically my NDQ levels, what I'm watching. I gave you the percentages and that breakdown. And then the last thing would be the Dow, right? So the Dow, take a look at the Dow. We'll bust down the Dow real quick. So we go to another yearly chart here. Now the Dow had a much better year than both the S&P and the Nasdaq. So low to high, let's go ahead and stretch that out for 2022, 3. And that low was 28,660.94. And then the high was, let's make sure that's right, 39. Yep, perfect. All right, so with the Dow, right? So with the Dow, what are the levels that we're going to be watching here? So with the Dow, let me go ahead and remove that. So the Dow, the yearly low that I'll be looking or paying attention to would be right there. There's 26,405. 26,405.59, right? And that's that. Now, right, let's throw in the percentages real quick. What does that look like? How do how do our percentages work out? Give me 1 second. Right, there we go. So from the close, right, if we were to get down to that yearly low, how about that? A 20% drawdown, get you right to this extension level. Now, as you can see from Dow's perspective, it actually managed to close above its 50% retracement. So you could almost say the Dow is still bullish, even though we know, and if we look at this yearly candle, this definitely looks like a bearish hammer top and the start of a reversal. So real sneaky by market makers to finish just above the 50% retracement, which kind of makes me think that we could, again, let's go down and bust it down to a weekly. You look at the Dow, could it have an opening week pop before we get our full rejection? Most certainly. We can see it pop up to this 33,785, right? Which would be for the Dow, about 2%, 2% rally. You get 2%, and then from there, do we start to reject? So that's what my levels that I'll be paying attention to on the Dow. All right, and so that was the Dow. Had a little technical difficulty there real quick. My screen went down, but I was able to pull it back up. So I was pretty much done wrapping up the Dow anyway. So that's, the Dow that we just bust down. So that's a nice little 2023 projections that I have for not only the SPX, but for the NDX, which is the Nasdaq, as well as the Dow. So busting down those levels, you kind of see like what my expectations are as far as, if we were to, have a good year as far as max downside. And then again, just the levels that, we could potentially see the market trade in and so forth. So with that being said, now I'm gonna just transition to the second part of the video, which are indicators that I believe you can use throughout 2023 that will help you not only pinpoint when we're gonna have pivots as far as when to buy, when to sell, all of that good stuff. So the main indicators that I'm going to be using 2023, we're going to start it off with our very first one, which is this bad boy right here. So we've talked about this in previous videos, but the S5FI, so S&P 500 stocks over the 50-day moving average. I'm gonna change this to a line, and I'm gonna remove that. I was just playing around with some stuff, but as you can see, this is a fabulous, amazing indicator. Oftentimes when it hits points of extreme, that's when you want to take something off the table. When it's at here at this lower end of extremes, this is usually when you might want to add some risk. And so I will be using this indicator as a tool that will signal when to buy, when to sell. So I will be buying when this indicator is sub 12, right? We get sub 12, that's potential areas to look to start buying. And when we get above 80, those could be potential areas where you want to lock in profit or look to take something off the table. Very, very, very simple with this indicator. And as you can see from a weekly perspective, just kind of reiterating what we talked about, that open and pop, before I deleted that, that's why I said it's very possible that we could see like a beginning of the year rally, because we've been on a nice slide. And so it wouldn't surprise me if that first week we try to pop up and kind of create a structure like this. But then that leads me to believe that once you get that pop and rejection, the slide into this first quarter could be something epic. Thus you see this type of pattern play out, where as you can see, this was the March top, right? When we got rejected here, what happened? We straight slid. This was around September. What happened? We straight slid. And then this was the August, so that really marked the top. So that was the first leg down. We got a nice little BS pop, or dead cat bounce pop, and then we started to slide down in October. So I am thinking, or have the projections, that something similar could be on the cusp. And so that first week, I'll be paying attention to see, do we get a rally? Does it hold? And then after that, how does the rest of the month go? The next indicator that we will be using is, again, same in similar fashion, the S5TH. So S&P 500 stocks above the 200-day. This is going to be number 2, the main indicator number 2. So same situation. Let me remove that. I was just playing with some projections here. But as you can see, again, this was around March, this was around August, and here we are currently in December. And as you can see, sell off ensued. So could we get an opening week pop? Certainly, right? Certainly. Let me go to the line chart. And as you can see, we're starting to already buckle. So with that being said, could we see a, an opening thing like that? And then after that, we start to come down, into February. So let me fix that up a little bit. Could we see this type of, situation or technicals play out when it comes to this? Absolutely. So this is what I'll be, another indicator that I'll be using, right? And as I said, when it's down here, sub 10, below here, that's when you want to look to maybe add some risk, buy, pick up a few shares or whatever. And when we're at these higher levels of 50 or so, these will be areas where you want to potentially take something off the table, or where I'll be looking to take something off the table or add protection, i.e. So this is going to be the indicator that I will be looking to use in 2023 as well. So that's indicator number 2. So number 1 was the S5FI, then number 2 is S5TH. Those are going to be the main 2. Then number 3 is going to be the infamous PE, right? So the S&P index PE indicator, right? So this was another one that I have been sharing recently that actually did a very great job of pointing to that end of the year term. Remember how I kept talking about 21 was that magic number? When we got there, I'd be looking for us to fall off and kind of start to retrace. The biggest thing is, let me change this actually to a line chart so it's a little bit cleaner. And then I'm going to take that separate, and I'm going to add 5 extra bars, and we're going to update that, right? So now you can get a nice, better, clean view of this indicator that I plan to use right here. So what this tells us is the price to earnings ratio of the S&P 500, right? So those 500 stocks, this tells us what's the average PE of the market. Now, and as we've been saying, with interest rates at where they are, having the stock market with a PE of 20 is relatively expensive. Biggest thing I would like to point out is that we begin the year, right, 2022, right here around 24. And so we did, the PEs fell a little bit, but most of the damage that has been done to the stock market wasn't valuation related. It was more yields and interest rate related. So going into 2023, this earnings and valuations is going to be a big conversation. So this is going to be a great tool or indicator to help you understand how things are flowing. So as we talked about in recessionary times, the average PE for the S&P 500 typically falls to about 15 to 17. And so that's what we want to pay attention to. When this bad boy comes and drops down to these lows, which is about 18.5, does it break down and make new lows and go into those recessionary periods, right? So if I go back, let me do 3 years, because then you'll get a real good feel for what I mean. Recessionary period. Bingo. So this was the 2020, right? You see how like once we broke down past 18, it was just a straight drop down to about 16. So this is kind of what we, the area we want to, see this indicator get to before maybe initiating some type of buy signal or so forth. Another addition another thing you can see about this SPX PE is that right here, the MACD and the histogram are starting to roll. This black looks like it's about to roll over to red, and these histogram bars are starting to go down, which means that this thing could be ready to turn and that the PE or valuations have another leg down, thus meaning the market has room to continue coming down. So this is indicator number 3 that this will be the main thing that I'll be talking about, updating throughout the year, as well as I'll be using to like just trust my signals. Now, this next one is shout out to my boy Calvin. He put me onto this one. So it's NASI, and this is the Nasdaq McCollum Summation Index. So it basically helps you understand the movement of the Nasdaq. So he put me onto this. I thought it was great. Heikin-Ashi, make sure that's changed. 5 extra bars. I want to separate the volume. Boom. So this is how you use that, right? So when you use this indicator, the instructions I was giving, you want to change the candles to Heikin-Ashi, put it on a weekly. And so then that way now your graph looks like this, right? And this has been, again, let me go to the 1 year or 2 years to give you enough history. This has been another great indicator for the Nasdaq that kind of tells you when to buy, when to sell, right? So if you go back and we use this as a guide in history, you can see that boom, late 2022, when it was up here, this was a great time to grab protection or to sell, because what followed a big, a drop, and then Nasdaq fell. You got down here, you got a pop, right? And the Nasdaq rallied a little bit. You got another down, which means Nasdaq went down. This was the summer rally, right? Nasdaq went crazy. And we got to August, you had another pullback, and then you got a little bit of this end of the year rally from the Nasdaq a little bit, and then look at that, it starts to reverse and it's coming right back down. Same thing, you can use your MACD and the histogram to kind of tell when these indicators are turning. And so what this is telling me is that the Nasdaq actually still could come down, and around this -1,000 has typically been a level where it seems to be okay to start putting on some risk or start watching for reversal. The thing in 23 is we want to watch to see, does it come back down to this -1,000 or maybe even -1,200, and does it start to form a bottom or hold here for us to start to like retrace or turn around. So the NASI will be the next or the 4th indicator that will probably be most helpful in 2023. And I'm going to finish it off with the last one. So the very last index or indicator that I'll probably be paying attention to the most, or actually 2. I'm sorry, I got 2. So I got the VIX, right? So we're going to go through the VIX. Look at it. See, I'll be playing around with these projections a lot, as y'all can see. But here we are. This is the VIX, right? So when I look at the VIX trading, let me move that out the way. I don't even know what this is. Oh, yeah. All right, so when you look at the VIX trading, you can see this is basically all of 2022. We just basically traded in a channel, right? The VIX basically stayed in the channel. We ain't really go no higher than 32. I'm gonna make that blue or red. And then, you know, this was kind of our support down here. And I'll just change 20, this one to the red. Boom. Well, now, you know what? I'm gonna do that. That's the truth right there. Now I'll get rid of that. So boom. This is the range the VIX basically stayed in all of 2022. So when it comes to 2023, the VIX will be another indicator that I will use that will help mark buy and sell signals. So when we are at this sub 20 around, you know, sub 21 area, these are areas where you may want to, or where I will be looking to necessarily take profit off the table or look to hedge, grab protection. When we are at these higher levels, say 32 and above, this is where you may want to, again, start to look to take off your shorts, right? Take some, if you are short, take profit on your short. If you want to go long, this is an area where you may want to find your stocks that you may want to go long and start building a position, because, you know, we're in high volatile times, and more than likely, you know, you can probably get some good prices. But at the end of the day, this is an indicator that I'll be using in 2022 that will help me understand buy and sell signals, because it's in a very defined trading range, and it's a very telling indicator. Like it didn't lie, right? And that was one of the things I talked about, just trusting your indicators in 2023 until proven otherwise. So every time it got down here, March 28th, that marked the top. August 8th, that marked the top. November 28th, will this mark a top? You feel me? So that could be the top, and then we just kind of playing around, and then boom, you know, and look at that. This was February. That was around the bottom before we got a pop. You look at April 25th. April, we didn't really get no pop in April. So this old little May run, that was BS. But June, right, that kind of marked the low. And then we got the nice rally over the summer. And then same, you know, situation here was from October, right? We got a nice little rally into the end of the year. And now, you know, will that same thing happen, right? So basically we're at a point where these mark the top. So do we start to see that reversal? And then once it gets up here, it marks that bottom, and then so forth. So that's the VIX, another indicator that I'll be using. And then the last one that I'll be paying close attention to is, we've talked about, is this yield curve inversion. If recession is going to be the big topic in 2023, then this yield curve inversion is going to be a highly, highly discussed topic when it comes to when and where the recession will hit, how long will it be? Again, another indicator that I have talked about multiple times, but just want to refresh your memory in that and show you that this yield curve inversion is at its highest that it has ever been, right? Has never been higher. And so when you look at these things, when they eventually turn, that is what has sparked or marked your recessionary periods. As you can see, this thing is starting to turn around. So what does that mean? As this yield curve inversion starts to come back down, ultimately that would be saying that the long end is now catching up to the short end, and eventually it'll cross over, right? So what I mean by that is the 2-year right here is higher than the 10-year. In order for this to reverse and come down, this 10-year needs to get higher than the 2-year, right? That's what I mean by the 10-year catching back up. So if we see this starting to come down in reverse, that means the 10-year rate is rising, and maybe the 2 years holding steady. But at the end of the day, the 10-year would be gaining ground on the 2-year. And as you can see in the past, these have all marked recessionary periods. So another tool, another indicator to keep your eye on, to let you know that we ain't out the woods yet. We is not out the woods yet. Don't look like no bull market is about to start no time soon. And that's that. Now that's pretty much it, right? So for today, I shared the 5 indicators that I feel will be most helpful in 2023, as well as busted down my levels. Now, some may ask, well, what about the dollar? What about bonds? What about yields? And like a few other things that I think I shared before. In 2023, I think there's going to be new correlations that happen in the market. So right now, as you can see, towards the end of the year, the dollar has been breaking down. And in 2022, the dollar was another one of those indicators that marked shifts in the market. I don't know if that will be the case in 2022, so I'm kind of sliding them down. I'll still keep an eye on them, but I don't early indications are that those indicators may not impact the market as much as we thought it did in 2022, or we think it will in 23. So that's why I'm not really including the dollar and the yields, except for the yield curve inversion, or like TLT and stuff like that, because I think the bonds could have a good year and stocks couldn't, right? So that correlation would be broken, whereas usually if the bonds was doing bad, the stocks was doing bad. If the bonds was good, stocks was good. So we might see that correlation break where stocks continue to not perform, but bonds can actually perform. So that'll be another like correlation that I'll continue to monitor in 2023 and just update you all, let you know what I'm personally seeing and if that's still holding. But overall, guys, I tried to make this video as quick and efficient as possible. Hopefully you got some value out of it as usual. Of course, as usual, if you did, please press that like button. Don't forget to subscribe and share this video with anybody that you feel could get value from that. And until our next special Setup Sunday episode update, I want you all to stay blessed. Have a great 2023. Peace out.